Taiwanese index is up around 8 points. It's Hang Seng, which is down 150 points as we speak. The finance bill says that mutual fund investments where not more than 35% is invested in equity shares of an Indian company will now be considered as short-term capital gains.
I think this comes as a surprise, and it has a very adverse effect, not only on debt mutual funds, but also on some other categories of mutual funds.
Positive start, 17,077 is where the index is opening up at.
I think it must have been in line with the common thinking which they have been having for quite some time.
We are going to see both MLDs and debt market funds sort of not being the preferred things and therefore not having any tax advantage.
Money may now move from this category to sovereign gold bonds and back to perhaps fixed deposits or NCDs in the debt space.
First and foremost, it came as a surprise given the fact nothing was brought up the budget discussion.
This particular move on mutual funds essentially makes life insurance products, long-term savings life insurance products more attractive.
Government want that all the individual should pay their rightful taxes, and particularly the high net worth individual.
0.0017%. The STT or securities transaction tax on options trading has been increased to 0.0021%.
Markets absolutely flat, not much action there. We did recover from the lows.
Well, that was a day so far, and what a day it has been, an absolutely roller coaster of a day. You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant Rima and Surabhi are here in the studios, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon. We were hoping for a quiet Friday into the weekend, and this has turned out to be nothing but quiet. I mean, this is painfully volatile. But and we're not done yet, by the way, mind you. Lots of changes with regards to the finance bill, lots of amendments and lots of clarifications and clarifications to clarifications. And we're in the midst of it still. The market has finally taken a leg lower. It was holding on quite well, but it's now firmly in the red. So let me just see where the turn happened. About 118, 120 or so is basically where the market started selling off. So it's been basically the last hour. We were at 17,100 and we've now lost, clean 100 points from that particular level, more than 100 points in the last 1 hour or so. Bulk of it coming in the last hour. Bank Nifty has also got a similar kind of a picture. I mean, starting about 115, 120 or so, the markets have taken a leg down. I guess, at the margin, in any case, they were selling, etc. And all these changes with regards to the finance bill, be it the debt mutual fund, which is what we started the day with, and now with, of course, the move to hike the STT. One can argue and say that the hike is not large on futures and on options, but the fact is that, incrementally it is not positive, it is negative. So it kind of sucks away any enthusiasm to try and go in and buy the dip. The one index which was doing very well in the morning, the IT index started 1.5% higher. Now it's barely in the green. Just about 30 points left on the Nifty IT index.
Don't forget global. You think it's only about STT? Look at what's happening to Deutsche Bank. It's down 8%. European banking stocks are falling like there's no tomorrow. European markets, by the way, are down between 1 and 2%. So, Rima, just when we thought maybe this is just like our day, we're dealing with our issues, our problems.
Jay what he told us 2 days back?
I do.
Closing
What's
bell
the next shoe to drop?
Yeah, the next shoe to drop could be Deutsche Bank. And today, of course, you're seeing a big cut.
Don't say it, guys.
I know exactly. I'm not saying it. I'm just,
you make it true by saying it.
No. So just to, tell our viewers what we are dealing with respect to the finance bill amendments. Normally, the finance bill is about 40 to 50 pages. Today, this time, it's been 220 pages, 20 new sections, 64 new amendments. And this is what we're trying to understand and grasp the nuances, the changes that have been announced and the implications for the equity markets, for the debt markets, and of course, even our taxation. So that's what we're dealing with. But in the process, the midcaps have taken a big blow now. The midcap index is down close to about 1%. The advanced decline ratio firmly in favor of the losing side. One stock in the green for nearly 3 in the red. And that puts nearly 2,200 stocks on the NSE currently in the red right now. So the broader market is crumbling very fast. The small cap index is down nearly 1.5% for the week so far. In the frontline basket, in the last few minutes, look at the vertical fall in names like a State Bank of India and ITC. In the auto pack, something like a Tata Motors, M&M, L&T has moved to the low point of the day as it's crumbled close to about 1.5%. So very, very sharp, come off as the markets are now trying to deal with the implications will be.
Absolutely. We have, of course, a lot of these factors playing out on the local markets here. But I just do want to go back to Europe to complete that point. It's not just Deutsche Bank. It's a couple of other bank stocks in Europe that are down sharply. And the markets there are down between 1.5% to some are down 2%. So while, of course, we'll spend a lot of time talking about our local news flow here and these amendments, let's not lose sight of this. And this is not good news because the last couple of days, we thought at least the global situation has stabilized for what it's worth. The Fed meeting was done. U.S. Treasury Secretary today kind of was reversing her earlier comments by saying that they're standing behind other banks as well. But right now, Europe seems to be a little wobbly with some of the markets down between 1.5% to 2%. That's the story out there. Back here, the saving graces of the Nifty Bank isn't leading the decline, at least as of now, which usually has been the trend. But nonetheless, we are looking at weak levels. 100 gone. Nigel, you've joined the party a little late. We missed you in the morning, but welcome nonetheless.
What an action-packed day, right, Surbhi? You thought you just need to pull through one day and get into the weekend, but the markets are having none of that. Plenty of news flow today. And as we speak, as you said, the European banks as well are cracking. So that's a bit of a worry out there. And the Indian markets, from pulling back into the green just around an hour or so ago, we're at the low point of the day. Now, I'm looking at the options data, and still the odds are that maybe the recent low will hold out. The 16,850 to around 16,900, that's a very, very crucial zone. And the options data is telling you that. Just pull up the 17,000 put. The premium out there is around 110 rupees. So those writers, when the premium is more than 100 rupees, the logic is normally that the writers are more aggressive. So around 110 rupees is what they're pocketing, and they're hoping that that 16,880, 16,890 odd level holds out. While on the upside, there is call writing at will. 17,100 call, 17,200 call, even the 17,000 call. Between the three of those strikes, 17,000, 17,100 and 17,200, more than a crore shares have got added out there. So now, in fact, the bears, they are feeling that we're not going to see those higher levels. Let's see whether or not some good news comes from somewhere. But for the time being, we're struggling at the low point of the day. Last 55 minutes, the bulls will want to pull back a little bit from these levels.
Okay, Nigel, thanks for that. Let's just quickly tell you how to position yourself in the last hour of trade. Mitesh is with us for that. Mitesh, just a bit of a knock, Friday washout into the last hour. What do you make of it? We're at 16,981, and I guess that 16,850 very quickly has come back into focus, although there is still some distance away. But two touches, right? One below that also, one day. But then strong bounces. Does that become the one to defend?
Broadly, I think you're right. 16,800 is the level which I'm looking at. I think given take 20 points, it doesn't make a difference. But that's where the gap is. But what is important is that the bank Nifty is on the verge of getting into a negative mode on the hourly and the 2-hourly charts. If that happens, I think then definitely we should test 16,800 very soon, and maybe on Monday or Tuesday. And then there's always a risk of the markets breaking below that. So the texture is becoming weak with today's fall. The only thing is that the way I would watch the indices is the bank Nifty. A break below 39,400, 39,350 zones would suggest that the bank Nifty would come under more pressure, and therefore in turn put pressure on the Nifty as well. So we're only about 100 points away from that 39,350 levels. If that breaks, I think we'll go aggressively short on the markets. But till then, also looking at more of shorting ideas. Gujarat Gas is a stock which is on the negative side. So I've got a sell over here. A sell with a stop just above levels of 492 and a target of around 468 on the downside can be looked at. And BHEL is also breaking down, negative candle slipping below the averages. The indicator is turning negative here. So sell with a stop just above levels of 74.25 and look for a target of around 68.
You said that if the Nifty Bank breaches 39,350, you will go aggressively short on the Nifty Bank. What would be then the target price? How much lower do you think it will head?
We want both the indices, to be very honest. But I think, yes, the Nifty Bank, obviously, that being the leading index should come into focus directly. Then I think I would look at a minimum 38,880, which was the previous hourly closing on the 16th of March. But more logically, I think, we are looking at much lower levels, possibly to the tune of 38,400. So I think a 1,000 point kind of fall can happen on the Bank Nifty immediately.
Okay, so if 39,350 is breached in the Nifty Bank heads down to levels of 38,880 and thereafter lower to 38,400. Mitesh, we'll come back to you. For now, let's get to the big story and the changes that have been announced in the Finance Bill of 2023. Surbhi's moved over to the big wig wall, and she's going to give us all the key changes. Surbhi.
Well, let me just put the caveat. I am not including securities transaction tax in this list right now because on that we're awaiting final clarity from the government on the base year rate, and there seems to be some discrepancy over there, and perhaps we'll get, some changes. So let me talk about the other major amendments that have come through in today's move. Number one, the hit on mutual funds, specifically debt mutual funds. Now, essentially what's happened is that mutual funds which have less than 35% of their assets under management in non-equity asset classes, be it gold, be it debt, they will no longer get the benefit of indexation. They will be taxed as part of short-term capital gains, which in the current regime means you get taxed at your marginal tax rate. So taxes as per slab rate minus indexation, huge blow for debt mutual funds. Let's move to the next one. This is good news. This is actually coming in for the banking units which are operating at the IFSC GIFT City offshore banking units. Basically, they get an enhanced tax break. Right now, income from these offshore banking units gets exemption, full exemption, 100% for the first 5 years and then 50%. Now this has been moved up to a full 100% exemption for all 10 years since the time of setting up. So good news for those who have a bank in GIFT City. Let's move on to the third one, and this is a big one according to a lot of experts in the market. The tax rate on royalty which Indian companies are paying to foreign companies, non-resident entities, that tax rate has been increased from 10% to 20%. Now, only those foreign entities that have the advantage of the double taxation avoidance treaties, only they will enjoy the lower rate of 10%, in some cases 15%, but otherwise all other entities have to pay tax on this royalty income at the rate of 20%. So that could be a big hit for some of the foreign entities. Moving to the next one, there is absolutely no change in insurance, so the hit stays. That cap on non-par policies remains at 5 lakh. The industry was hoping it gets extended to about 7, but that has not happened. Similarly, there is no change with respect to taxation of REITs and InvITs. There was a lot of representation that was made requesting that the tax that is levied on what is called as the repayment of loans from REITs and InvITs onto their investors, that should be treated as capital gains and not income from other sources, because if it's capital gains and it's still tax efficient, income from other sources means you get taxed at your slab rate, and that stands. The finance ministry has not gone back on it, so that continues to be something to watch out for. Last but not the least, no change whatsoever in the reinvestment of capital gains in residential property. The cap that has been levied at 10 crores on high-value residential property remains. You cannot reinvest capital gains by going into properties which are more than that value of 10 crores. So those are some of the key highlights from a market perspective in terms of the amendments that have been moved today.
Surbhi, thank you very much for that. Let's get in Prakash Diwan and try and understand the implications of each of them. Prakash, the first one is on the debt mutual fund, no taxation benefit for long-term investment. AMC companies, UTI AMC, HDFC AMC have all cracked 4 to 5%. Do you think the price now captures in the uncertainty in the future, lower inflows, or do you think there is more weakness in store and therefore you would right now at least stay clear?
Good afternoon, Rima. So, interestingly, it's come at a time when fixed deposits are just getting more attractive. And this just accelerates the process. What it does is it takes away the tax arbitrage advantage that debt mutual funds had to offer. It may not be so relevant for retail investors per se, but for institutional investor, for large ticket HNI investor, this is seriously a dent. This is going to be a disadvantage of sorts, which debt mutual funds earlier very distinctly offered. So I don't see any reason why there can't be at least some shift of incremental money, if not the existing AUM, to fixed deposits by people. People will, of course, try and kind of evaluate, what's the relative advantage in terms of accretion to them, and that will happen. So it might take time, but it is certainly a lot of AUM on its way out. And debt mutual funds are a big part of most AMC's fee income, and that is going to take an impact. So yeah, I mean, I think what you're seeing on the screen is not just a knee-jerk reaction, but probably the beginning of a little bit of a re-rating downwards for some of the earnings trajectory for most asset management businesses. And to be honest, this was a space which was always under stress given so much of regulatory changes on the fee side, on now the taxation side, and then of course, as I said, the competitive intensity from other alternative asset classes. So I would definitely stay clear.
All right. Hi, Prakash. Prakash, what about campus activewear? We were anticipating this large trade to take place. It's taken place. The problem is, even though the stock is half from the top, it's still trading at very elevated valuations. What's your view now? And we're not sure whether the overhang is completely out of the way.
Yes, Nigel, you're absolutely right. The overhang continues to be still around, given the fact that it came at a time of exuberant valuations, and it's playing victim to that. And people at some point in time, the ones that come in probably hope that it would start kind of delivering slightly superior earnings to match the high valuations. But the space it is in, while it's from a large macro long-term perspective very promising, I don't see the kind of comeback in terms of demand, the kind of pricing power that they need to start clocking decent margins to justify any kind of a premium valuation. So we've seen this happen to the likes of Relaxo at some point in time, where it fell from grace. The whole saga of being such a sought after stock, and then it kind of got into the doldrums. So this is not something which is very surprising. But yeah, in terms of the intensity of fall, I think it could probably have some sort of a time correction, if not a price correction anymore, given that there are people who are willing to bet slightly bigger than normal on these blocks, as they're indicating. But it's best to kind of look at something which is more staple, much more non-discretionary in consumption, rather than these kind of plays at this point. 340 is not something which is offering great value at this point. Sure.
Okay, still expensive. We'll take a break here. The market's down 90 points, no real recovery. 16,991 is where we find ourselves at. We'll come back, and Prakash, of course, stays with us. Rajesh Kothari of Alpha Accurate Advisors will also join in on the other side. We'll discuss markets with them in just a bit.
Welcome back. At least the downward descent on the indices has stopped. So after falling nearly 100 points from levels of 17,100 to sub 17,000 in the last 1 hour, now the markets are just spending some time below that 17,000 handle. Still lower by 0.5% on the benchmark indices, 90 points down on the Nifty with the sensex down 250 points. But at least the fall for the last 10 minutes has been arrested in a way. Midcaps continue to bleed. Midcap index down 1% with individual names like Sundaram Clayton. That's down nearly 20% in trade. JK Tyre, a stock which had rallied hard in the beginning of the week. Now all those gains are getting undone. JK Tyre down 9%. Puravankara has sold off close to about 8%. Few gainers, but something like ITI catches your attention because it's rallied on pretty good volumes. RVNL, which announced a dividend, is also higher in trade. And Cyient in the mid-cap IT pack is up close to about 5.5%. Prakash, with the fall that we've seen in mid-caps over the last couple of days, any mid-cap which has come to very attractive levels and you would recommend a buy right now?
So, Rima, I mean, it all depends on whether you like the fundamentals behind some of these mid-caps, and the price correction is essentially nothing but a softening of valuation premiums. I mean, that's where, things are getting more and more attractive. And as I said, post-March numbers, you'll probably have a very different set of companies emerge as very attractive from a price to earning growth multiples, right? Because the outlook is positive. So to make a long story short, if you were to look at some of these companies within let's say the auto space or the auto ancillary space, there are, like, let's say, a Motherson wiring, this thing, not the Samvardhana business, not the international business. I'm talking about the domestic wiring harness business. You are finding that, you actually find that available at a PE multiple, which probably is far more reasonable than what we've seen in recent times in the sub 50 category. Or you have some of these renewable space players like KPI Green. It's a small company, of course, very small, 1,600 crore market cap, but tremendous amount of traction in terms of the contracts that they're getting, the kind of ROEs that they have been able to clock incrementally every quarter. So once numbers come through for March, you'll probably start seeing the whole emergence of some of these small names that offer big gains and promise. So I would not be in a hurry to do that, but because there's no runaway rally that you are seeing or expecting at this point in time. But keep a watch on the same good old businesses that start getting available at, as I said, better valuations. And the space that probably is also emerging as the pocket of promise is sugar. I know sugar is usually always circumspect in terms of regulatory overhang and things like that. But given the way things have cleaned up on the balance sheet in the last 2 years, some of these larger players will have some very significant disproportionate advantage of higher international prices now that the crushing season is also coming to an end. So you have a full play of inventory which could throw up these opportunities in that.
Got it. All right, Prakash, very quickly before I let you go, Rima pulled up Sundaram Clayton. And the stock is appearing like it's down 20%, but actually there's a corporate action that's taken place because they announced some time back that they're going to be giving out a non-convertible preference share of roughly around 1,100 rupees, and that's why the share has adjusted by that. So whoever bought yesterday, actually they'll be getting this 1,100 non-convertible share in the coming time. Do you have a view on this stock? Because they've announced an entire scheme where first you will get this non-convertible fixed asset. Then later on, they're going to demerge the business. The die casting business will be listed separately. And it's an indirect play on TVS Motors because they hold shares out there. Do you have a view on it?
Oh, absolutely. I think this was a fairly complex restructuring exercise. And actually, once you dive into it, you'll realize that the sum of parts is far greater than what the stock offered at, closer to whatever 4,700 whereabouts. The reason is very simple. The demerger will eventually unlock value, and you probably have very separate treatment in terms of the multiples being accorded to both the businesses, the core business and the die-cast business, which is something which always kind of brought the overall valuations down. So it's definitely tremendous unlocking potential in this sense. And the fixed income, paper that you're actually getting, if you add that up also, I don't see any reason why with that preferential dividend attached to it, it would be unattractive. So it's something which you could also liquidate if you don't like. But if you were to keep it in the portfolio, it's a great combination of dividend yield and capital appreciation from all these 2-3 different instruments that you will start owning. So it's quite positive. As I said, the underlying business is also fairly intact given their strength. Not at all vulnerable to any kind of migration to EVs and things like that. It's a very steady state business with almost like a monopolistic status.
All right, Prakash, thanks very much. Good. Have a good weekend. Appreciate you joining in and running us through those views. Rajesh Kothari is Managing Director at Alpha Accurate Advisors. He's joining us now. Rajesh, good to have you with us here. Thank you very much. I mean, if you have a view on all these changes in the finance amendment, do tell us. Market continues to correct a little bit. I'm assuming there's a bit of global pressure, no real motivation locally with these changes, at least today, near term. But more importantly, I was looking at your portfolio, and you own Muthoot Finance in your portfolio stocks. I mean, just a complete slam dunk, down to 950 now. Lately we've been speaking with the management of Muthoot Finance. Last two interactions spread over the last month and a half have been a little more positive. They're saying, basically the last time they were on a few days ago, they said that FY24 AUM growth should be back to 15%. They seem to be on a bit of a mend. Would you hold on, be patient here? What's your sense?
Well, basically, this is a new addition in our portfolio in a very recent time. And it has been said when, others are greedy, you have to be fearful. And when others are fearful, you have to be little greedy. This is the company which you are talking about, which is number one into gold financing business. Undisputed market leader from generations. They know how to do this business without NPA. They also know how to do this business with a very efficient operations. That's something very important in gold finance business. And of course, with the RBI approval to expand the number of branches, the growth from FY24, in our view, is going to be much better compared to what we have seen in last 2 years or so. So, this is a company with gold standards in terms of asset quality and in terms of the business practices and in terms of management. And that's why this has been a recent addition in our portfolio, across our plans. Kindly please put a disclaimer because we are holding this for our clients in PMS.
Rajesh, hi, good afternoon. Your thoughts on both mutual funds, the listed ones, asset managers, as well as insurance companies? Now we have clarity and the hits are pretty clear.
Well, currently we do not own, any asset management company in our portfolio. We own one of the insurance company, one of the large insurance company in our portfolio. And I think, there, of course, everybody got that shock on the day of budget, but the prices and valuations have already corrected. And we hope that, the opportunity remains big. The only thing is from structural perspective, in India, the problem in India is that everything gets sold because of fear, because there is a taxation, because there is a fear, therefore people take insurance. So the question is in the long term, can there be a structural PE derating? Because now we are not going to be able to do it because of the new regulations in place. And that's basically what puts a little bit question mark in terms of what valuation these companies will now command. So we have very small exposure, probably less than 2% in our portfolio. We are wait and watch mode kind of thing. But I think there are better places within banking and finance apart from insurance and asset management. And that's where most of our portfolio in banking and finance we are positioned for.
Rajesh, any other recent additions in your portfolio or any other stocks where you topped up your positions in the last 2 weeks?
Well, it is we keep doing it as and when it is required. I would not like to make stock specific comments, but 3 themes on which we remain positive. One is the capital goods, the capex story, that the growth drivers are increasing every day. The pace of growth is accelerating, whether you're talking about data center, whether you talk about smart grid, whether you talk about automation. I think there is a lot of traction over there. If you look at last 6-7 years, the central capex has been almost double digit. And now we expect private sector also capex to start probably by 2Q or 3Q. So capex story is one story which we continue to like. Second story, what we like is consumer discretionary. And if you look at our AAA budding beast, our mid and small cap portfolio, we hold almost 19-20% into consumer discretionary. And then we own a number of segments like luggage and consumer durable and appliances and so on and so forth. That's another space which we continue to like. And third space is, of course, banking and finance, because we believe that non-food credit growth has been very strong, double digit. And from here on, we expect even net interest margin to remain strong at least for next 2-3 quarters. asset quality is under control, the credit cost is under control, and therefore even banking and finance is expected to do reasonably well from current levels.
All right. Hi, Rajesh. Talking about luggage industry, I think you all owned Safari. That was one of the companies, and the management sounded extremely optimistic when they spoke to me earlier this week as well. Before we let you go, Rajesh, could you tell us what are the cash levels you're sitting on? Are you deploying, or are you still waiting by that maybe you get a deeper correction? Because most of the commentary now seems to suggest that there's no reason for the markets to move up. But there'll be plenty of stocks out there that are offering value. Your take?
Absolutely, Nigel, you are completely, 100% right that there are a number of opportunities we see. After a long time, the valuation, the entry point, the margin of safety is in your favor. We are at really good attractive levels. At times it looks boring, but that's what makes you money more rather than every day up plus minus 5%. Actually, that doesn't take you long. So I think it's a very good market from valuation perspective. If you look at last 18 months, there is a time correction. And if you look at the price correction is from 19,000 to 17,000. So 10% price correction, 18 months of time correction, it means again another 10% discount. During the same time, the earnings growth has been up 25%. So you put that, so total discount is 45%. Put it in another way, if you look at market cap to GDP, we are at 95% compared to peak of 115%. If you look at the GDP growth of the country from September 21 to March 23, GDP is up 25%. So whatever way you want to slice and dice, there is no doubt that valuations are in your favor. And probably the worst is going to get over. The volatility may continue. You cannot time the peak and trough. It's very, very difficult to time the exit market. But I think from current level, there is a reasonable good probability of making decent returns with a 3 to 5 years time horizon.
All right, Rajesh, that point is well taken. It's just the near term that we have to get through, and that's been the really volatile period. Thank you for joining in today. You have a good weekend, and we look forward to our next conversation. Well, let's dial back to the big story of the day, all the amendments that have been moved to the finance bill. And of course, now they have been passed. So it is practically the Finance Act that we're talking about. Sunil Badala, partner and national head of BFSI at KPMG, is now joining in. Sunil, thanks so much for taking this quick call with us. I think the one thing we need clarity on is the securities transaction tax, because there was a lot of back and forth on whether, the present rate on which the 25% hike has come in, whether it is 0.017% or, the present rate already stands at, I think, 0.05%. The government is supposed to come out with a clarification as well. But if you could tell us your interpretation on how things stand.
Okay, so I think as I have looked at, Surabhi, there are two changes that, that are being proposed. So there is a STT on sale of futures, which is currently at 0.01%, which is proposed to be increased to 0.0125%, which means it is 25% increase over the existing rate. And then you have sale of options in the securities, which is currently in the Act 0.05. And if the intention is to increase this also by 25%, then it should be 0.0625%. The confusion has come in because the way it has been drafted in the finance bill is that the STT on options has been increased from 0.017 to 0.021. Now, if let's say 0.021 is the rate, is the new rate, then effectively there is a huge decrease in the existing rate, which is 0.05%. But as I said, if the idea is to increase the STT on options, just like they've done it for futures, then the correct rate should be 0.0625.
So, Sunil, should we follow the spirit of the law and assume the STT to be 0.0625? Or do we follow the numbers, which effectively is a decrease in the STT and brings it down to 0.021? And what is required now from the Finance Ministry? Will just a clarification do, or do they have to move an amendment which needs to then get passed?
So I have not seen the latest print which has actually been passed, but I'm just saying what was been presented. actually had the rate of 0.021. To answer your question, you cannot go by the spirit. You have to just look at the rate which is there in the fine print. So if it has been passed as 0.021, then that is the rate. But I'm sure they will have to clarify this, because, as I said, the spirit seems to be 0.0625, and what is needed to be done on that is obviously they have to again put another amendment in the parliament.
Right. Sunil, afternoon. Now, there is no other way to interpret this, right? I'm just trying to look for whether, what has been put out by the government is correct, and are we making a mistake? Because we will get a clarification from the finance ministry shortly, we are being told. But I'm just asking you, is there any other way? Are we missing anything?
No, there's no other way, unfortunately. I think, and as I said, look, I wouldn't just go by the spirit. I would just go by the rate which is printed in the finance bill, which has now become act. So we'll have to really see what is there. If it is 0.021, then so be it.
Then that's a huge cut, and I think then the market will be very happy with the letter of the law, because if the letter says it's supposed to be a cut, then I think people will take it with both hands. But Sunil, I believe collections have been very...
That's too good to be true, actually.
That's too good to be true, like you're saying. Okay, fair enough. We'll get that clarification shortly. Just a word on collections, because I believe collections have been, increasing very steadily. The total kitty that the government gathers through STT. If you have some of the latest numbers, if you could just tell us.
No, so unfortunately I don't have the numbers, but yes, I agree. I mean, it has been increasing very steadily, and it seems like very stable collection.
All right, Sunil, we'll leave it there. Thank you very much. And we'll lean on you once again when we have the clarification coming in. Hope you can join us again. Thanks very much for that quick chat. Well, 100 points lower on the Nifty is what we have, 16,965. So there is no recovery. If anything, I mean, the market's taken another leg down. We're basically at the low point of the day. And let's just look at the Nifty Bank as well, where also I think we're at the low point, almost the low point of the day on the Nifty Bank. Market breadth is negative now, 3:1, easily 3:1, more than 3:1 in favor of declines. 1,750 stocks are lower, and about 550 stocks are higher. It's a very different looking picture from the first half. We'll take a break here. As always, we'll get you a quick check on what's happening in dealing rooms. What is Nimesh picking up in our segment D Street Chatter? And of course, we'll get you buy today, sell tomorrow calls with our technical experts. Stay with us.
राइजिंग इंडिया का मेरे लिए मतलब है देश के 125 करोड़ लोगों के स्वाभिमान का राइज होना, देश के आत्मगौरव का राइज होना। आज पूरा विश्व भारत के इस उदय को, राइजिंग इंडिया को मान दे रहा है, सम्मान दे रहा है। ये राइजिंग इंडिया की एक ऐसी तस्वीर है जिस पर हर हिंदुस्तानी को गर्व होगा।
Poonawalla FinCorp presents News 18 Rising India Real Heroes. 29th and 30th March on News 18 Network. Presented by Poonawalla FinCorp Limited, enabling dreams.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets are under some pressure today, so it's a good time to hop across to Nimesh, who's joining us in the special segment, D-Street Chatter. Nimesh, what are you picking up? Are there flows or is there more confusion today?
Well, the news flow has actually dampened the sentiment, right? The confusion on STT, the confusion on the debt mutual fund treatment, and also there's actually been a bit negative. But overall, it's a lackluster day of trade, where the Nifty is down, the Bank Nifty is down. Broadly, the markets are down. But this lack of participation is what I understand, not only from the large institutions, but from the retail and HNI investors as well. So, you know, with the fact that the Nifty has been so range-bound for the last many weeks now, I mean, people are losing the interest, so to speak. You know, there is not much money to be made. Not even in investments, nor even in trading as well. So that's, I guess, is impacting the overall news flow and overall the flows as well. I guess the institutional data, though it's going to be mixed, but it's going to get impacted by the large block of campus because it's an 800 crore deal, and there is a mix of FIs and DIs, what I'll cover in the charter as well. I guess from a technical point of view, 16,800 is a very important support level on the Nifty. But I guess today's close will be important because looking at the put call data, it looked like 1,700 will be defended by the bull. So if they are unable to defend it, I guess we'll open gap down tomorrow or on Monday. So that's the overall feedback from a positioning point of view. But as I said, it's lackluster and there is lack of participation now from traders as well as from HNI investors.
Yeah, the debt mutual fund issue, then you have this STT, and then suddenly Deutsche Bank is down 8%. Yeah. So weak global cues as well. But you said that you will tell us about individual stocks, so go ahead.
Okay, so in terms of individual names, the first stock on my list today is Kalyan Jewellers. The stock has been consolidating in the last many weeks now, but now I believe there's going to be a large block deal in that company very soon. A potential PE investor is likely to be a large seller. So that's something to track in Kalyan Jewellers going forward. So that's the first one. The second stock is Kalpataru Power. Again, the Y2D, the stock is pretty much flat. Even in Kalpataru Power, the feedback is there's going to be a large block deal very soon. And possibly the promoter entity could be a seller in that block. So even that needs to be tracked closely come next week. The third is Campus Activewear. A large block today, nearly 8% equity changing hands. We know the seller, that was the private equity investor TPG, who's got a clean out. But in terms of buyers, I believe one large FI was an anchor investor, so that disclosure will be important. A couple of domestic mutual funds have also participated in the block deal, and one of the large HNI investors was a buyer in today's block as well. So the disclosures will be important, and I believe there was a 10% slippage in the block as well. So that's the reason why that stock is under pressure today. And the last stock is Titan. Again, been in that very narrow range in the last few weeks. But now there is an indication that there could be a big corporate development in Titan very soon. So that's something to track going forward in Titan as well.
For that, there have been a spate of exits from Nykaa, it appears. That's what Reuters is reporting. 5 executives have stepped down from Nykaa. And this follows the resignation of the company's Secretary and Compliance Officer, which took place when the company announced their Q3 numbers. That was in February. And prior to that, in November of last year, the CFO had also stepped down. So the high-level exits continue at Nykaa. But the Nifty has now breached the 16,950 mark. Mitesh is back with us for a few BTST calls for the weekend. Mitesh, heading lower, any trades that you would recommend?
So I have, in fact, 2 sell-side trades. I think very clearly the market is closing weak, and there's a good chance, as I said, I think the Bank Nifty is also, on the verge of breaking down, though I think we might not get a closing below that because the closing will be half an hour's average. But the overall structure, does favor possibility of taking more of short-side trades. So Jindal Steel and Power, I think that's something which is at the low of the day. That's a STVT with a stop at 540. Look for targets of around 522 to about 520 here. And L&T Finance, that's another STVT fall with a stop at about 83.20 for targets of around 81.
We need BTST, not STPT. But that's the market we find ourselves in. Mitesh, thanks very much. Good getting those trades from you. We'll take another quick commercial break. More market talk on the other side when we return. There's about 12 minutes to go for market closing. 16,940 is where we find ourselves at.
Well, in the last few minutes, you've suddenly seen a sharp downtick on the Nifty itself. You have Adani Ports that's moved lower. HCL Tech as well has taken a sharp knock. And a couple of these heavier stocks, L&T and SBI, both of them have seen a sharp drop. And that's why the Nifty has moved to the low point of the day. Before we enter that grave, Reema was talking about Nykaa and a spate of resignations that have come in there. Neeraj Diwan, Director of Quantum Security, joins us. Neeraj, any view on Nykaa? Clearly you don't like when the top management, there are a lot of resignations out there. But the stock has seen a big correction from the top. So how do you view the stock at around 139 odd?
Yeah, good afternoon. Actually, if you see the last 6 months or 1 year, the stock has been coming down only. The trend has been clearly down. And even results have not been encouraging. Post the listing, we didn't see any good sort of results also coming in. And plus, the kind of exit is also not helping. So I don't see anything positive that is coming their way. I think the only thing that can stop the stock to underperform and start performing will, in case they're able to come back and perform and show some improvement there. I don't think there's any case to buy the stock and hold and then wait for something to improve. I think better to see something positive coming their way before one takes a call on Nykaa.
Nykaa has seen serious value destruction right from the listing time. Stock used to be above 400 at one point in time, and now we're looking at values of 130, 39. Of course, a lot of chatter. In any case, this is, of course, fresh news that Reuters is reporting. But in any case, lots of chatter around how they will take up the onslaught with the biggies like Reliance into the beauty segment. Shoppers Stop getting very aggressive in the beauty segment as well. So that's, of course, a stock that's making it to the headlines this afternoon. Neeraj, just want to get your thoughts on some of the other names. This week we've seen a lot of selling in IT. Today there was a minor reversal because we had the Accenture numbers also come in. So compared to the rest of the market, those stocks even now are looking at some green. Would you be a contrarian? Would you look at bottom fishing and buying something in IT?
I think again, IT saw recovery after falling last year, but then the recovery again got threatened with, again inflation, whatever news came the way. But then, this banking turmoil which has hit US can also impact some of these companies. So we don't know the impact which can come. Though, if you look at some of the stocks, like, you just flashed Infosys and HCL Tech, I think they are attractive now purely on valuation. But then we need to now hear from the management what impact can come from the BFSI space, where they have a good percentage of the business coming from. I think I'd rather wait and hear the management, when the results come for this quarter ending on 31st March, and then take a call, because as such, if slowdown is hitting US plus banking is taking a hit, so there is definitely nothing very positive for them. But once you get a clarity on BFSI space, I think valuations definitely are looking better for some of these large cap IT names.
So when they report their Q4 numbers, what are the numbers that you're looking for? Say in terms of guidance, we'll get the guidance from CN, Infosys, HCL Tech. What will be the number which will give you confidence about this sector to invest in the month of April?
I think, basically it is more to do with, the environment, and not the pure number, because it's the environment, and plus the margins should show some improvement. If you get some numbers on some improvement in margin, I think that will give some confidence. Order books are there, orders are there, and they're getting orders. But whether that margin will improve going ahead and the outlook will improve or not. So major is the outlook rather than just seeing whether it's 3%, quarter-on-quarter growth or 5%. I think that will not be that important, but what will be important will be the outlook on the environment and the margin improvement.
And the margin improvement. And is there any case for looking at any of these asset management companies? It's not as if they're down today. They've been down on a 4-5 year basis. They've all underperformed quite a bit.
Yeah, absolutely. They've underperformed. Plus the news which has come from the debt market side is also not good today. So let us first see the impact of the news. Let us see what's the kind of impact. In a couple of days, we'll get some more clarity on the impact, what kind of impact can come. And then I think we can take a call. So you're right that they've seen a correction and there may be some case for bottom fishing, but I'd rather wait to see the impact which can come because of this news.
All right, we'll leave it there. Neeraj, thank you very much for your time. Appreciate you joining in. I mean, the impact today, of course, is 3-4% cuts on stocks like HDFC AMC and UTI AMC, etc. 150 points lower on the Nifty is where we will finally end, which basically is at the low point of the day. 16,917, I think, is the low. We'll end at 16,927. So
and the Nifty is the Nifty Bank is at 39,350. That's the level Mitesh said that if we get to that level, he will open up aggressive short positions. 39,350 on the Nifty Bank.
The recent swing low was 38,941. You know, it was a big day. There was a big swing, and then the market did quite well. That is, it's not very far. I mean, another 1% and you're there. It's that kind of a market. So we'll see. But today was definitely a pretty weak kind of session to end the day with. I think all sectors in the red, but real estate, PSU banks and metals, the top losers. Mid-caps and small-cap indices also down 1.5% each. Prima.
Well, the Nifty is ending just above that 16,900 mark, a cut of 150 points. For the week, the Nifty is down 1%. The mid-caps have trailed the frontliners week to date. The mid-cap index is going to go home with a cut of 2%. And today as well, it's underperformed with the advanced decline ratio firmly in favor of the losing side. 2 stocks in the green for 7 in the red. Many stocks actually closing at 52-week lows. So whether it's Walkhard, Easy Trip, SpiceJet, Tanla Platforms, Puravankara, all the LIC, emphasis in the mid-cap IT space, all these stocks today are at 52-week lows. In the frontline pack, big cuts seen in Bajaj Finserv, Bajaj Finance, metal names like Hindalco, Tata Steel taking it on the chin, Hero MotoCorp corrects down 2.5%, Reliance Industries weak, a cut of 2%. On the gaining side, some buying coming in pharmaceutical names like Cipla, Dr. Reddy's, throw in a few defensive names like IT. So Infosys also managing to just close marginally in the green.
Oh, well, probably one of the few IT stocks that managed that. In the mid-cap market, we've seen a lot of pain today. The mid-cap index has fallen more than the Nifty or the sensex, down about 1.4% as the day goes out. If I talk about the major losers, of course, Campus Activewear finally is ending down about 9% after that block trade. You've got some other stocks like Angel One as the market waits to get more clarity on this STT issue. Bandhan Bank is down about 5%. Biocon's lost about 5%. SAIL, Easy Trip, LIC Housing Finance, SpiceJet, Zomato. These are, a lot of the losers today. Then bring in some of the names on the banking side. Bank of India is down about 4% so deep cuts coming in over there. IOB, Canara Bank. So PSU banks definitely out of favor. It's not as if there was a trade, away from mutual funds, stirring up the pot for the banks. Most of them down, and the mutual fund stocks themselves, of course, losing anywhere between 2% to about 5% on UTI AMC, as the budget blow has been delivered on the asset management industry.
Well, we're going to wrap up on Closing Bell. Don't go anywhere. The focus on debt, mutual funds, and the finance bill continues on our special show, The Newsmaker, on the other side.